The final company we have presenting today is Endeavour Mining. We are fortunate to have the CEO, Sebastien de Montessus, presenting. Prior to Endeavour, Sebastien was the CEO of the La Mancha Group for 4 years, from 2012. Before this, he held executive roles at the Areva Group, the leading nuclear energy company. Sebastien comes from a finance background. Sebastien, thanks for joining us.
This is Endeavour Mining, and I'll start with a quick presentation overview of our operation. As you can see on this slide, we are a premier diversified West African gold producer, currently operating in 3 major countries, Côte d'Ivoire, Burkina Faso, and Mali. Since the acquisition of Semafo, we are now a million-ounce gold producer with all-in sustaining cost below 900, targeting around 850 all-in sustaining cost, and therefore entering into the top 15 global gold producer. But as you can see, highly focused geographically on West Africa. I'll start this presentation by coming back on why West Africa. If you look at this slide, these are the 3 countries we operate in. And for those who aren't very familiar with Côte d'Ivoire, Burkina Faso, or Mali, we put this slide together with some basics, facts, and figures. What stands out that all 3 countries we operate in are growing at a rapid pace in terms of population and economic growth. Large-scale opportunity for investment with very favorable economic and investment policies. Also all francophone, French-speaking, which for part of us which are French is pretty helpful in terms of relationship with union, communities, administration, and government. We've been committed specifically to that geographies to become real strong partners for our host countries, so that we make sure that we support them in all the way we operate in country. The other interesting thing about the countries where we're operating is the fact that they are all into a single currency region, economic region. So they are all pertaining to what we call the WAEMU economic zone. So all those countries in blue you see on this slide have the same currency, the French CFA, and means also that they've been aligning up progressively all their fiscal tax regime, and also getting progressively their mining code aligned. And I do believe that a bit like the European Union back 40, 50 years ago, this is also a strong way to ensure stability, political stability in that region. The next slide is about West Africa is growing very quickly. And if you look in particular on this slide, you see that all 3 countries where we have operations have higher forecasted growth compared to the traditional frontier markets. Côte d'Ivoire economy in particular has been expanding by an average of 8% GDP growth per year since 2011, making it one of the fastest growing country in Africa. You can see also when we compare that to the rest of frontier geographies like South Africa, frontier Europe, even frontier Asia, that the countries where we operate are in fact fast growing compared to those other markets. Now, as I was mentioning, you can see also that from a pure mining code, those West African countries are well aligned in between countries, which avoid fiscal dumping between those countries, and probably stability in terms of attractiveness, but also that they are pretty much in line compared to other region. If you take in particular Australia, US, or Canada, you see that all West Africa is about the same fiscal terms. Now, moving into the next slide, you see that the exploration efforts in West Africa ranks 3 worldwide compared to after Canada and Australia, which means that is about 5 billion that has been invested in exploration over the last 10 years. If we move and look at the next slide, what has been very interesting and attractive for us is the fact that this specific region has been the first one in terms of discoveries for ounces over the last 10 years. So you can see here 79 million ounces discovered over the last 10 years, which is far more than countries like you would imagine Canada, US, or Australia. So West Africa has been the number one discovery region globally. And what is even more interesting is to see that when you look at the size of West Africa that we've been considering, in fact, in terms of landmass compared to exploration countries or larger countries like Australia, Canada, and US, you see that the landmass is probably 5 times smaller than countries like Australia, Canada, and the US, which shows how highly concentrated the discovery of gold has been in this region. Why do we see so much concentration and high discovery potential? So this is probably one of my favorite slide, where we basically see that the geology that we are targeting is what we call the Birimian Greenstone Belt, which is all the green part on this slide. And what's interesting is to see that the Birimian Greenstone Belt lies, between 5-6 countries from Senegal, Guinea, Mali, Burkina Faso, Liberia, Cote d'Ivoire, Ghana, and Burkina Faso. But what's interesting is you see that about close to 60% of this Birimian Greenstone Belt lies between Burkina Faso and Cote d'Ivoire, while in fact, if we look at the next slide, the biggest production has been on Ghana and Mali. So coming back one sec on the previous slide, you see that in terms of production, which is the bottom pie, biggest part of the production in ounces has been into Mali and Ghana, where only 20-25% of the Birimian Greenstone Belt lies. The reason behind that is mainly geopolitical. In the past, historically, Cote d'Ivoire and Burkina Faso were complicated countries to operate and to do exploration. So the exploration budget have been mainly into Mali and Ghana, hence the production that we have now. What's been very interesting is all the geopolitical changes over the last 8 to 10 years, which makes now Cote d'Ivoire and Burkina Faso highly investable countries with much more stability. They all went through major democratic changes with elections in Cote d'Ivoire and Burkina Faso, which were democratically very successful, hence also the growth, GDP growth in those countries over the last 5 to 6 years. Now, in particular, if we look at this next slide, you'll see that over the last few years, and this is an example around 2017, that in fact 50% of the exploration budget in West Africa has been focused on Burkina Faso and Cote d'Ivoire, which reinforce again how attractive those two countries specifically, who never had big exploration done, are fast growing in terms of exploration. And now if we look at the strong production, so moving from exploration to production, you see again that now from a yearly basis, the gold production in West Africa is now ranked number 4 after countries like China, Australia, and Russia, and ahead of United States, the US. So if you're looking at a top region, investable region, some investors are attracted by China and Russia, for example. Then you take West Africa, which is the second biggest gold production region after Australia and ahead of the US. So out of those specific region, what is interesting and what has been our focus at Endeavour Mining is, as you see, when we look, with the other gold producers that are in the region, we happen to be the only company which is focused in West Africa. And since the acquisition of SEMAFO, we are now the largest gold producer in this region. And what has been interesting for us from a strategic standpoint is, if you look at all those different players, they've been progressively leaving the field and refocusing themselves on other regions than West Africa. Randgold, obviously, which was rolled out into Barrick, and therefore West Africa is not anymore their key focus going forward. my friend Clive Johnson at B2 Gold, where he's expecting his next project to be outside Africa. Newmont, which is only focused in Ghana and not looking at expanding into Africa. If you take Anglo Gold Ashanti, which is basically busy right now streamlining its portfolio. Should have mentioned also Goldfield, which is in Ghana and only in Ghana. So what's interesting is the fact that we are the only large player in this region, and we see therefore a massive opportunity to continue to grow, being focused on this region. Now, the next one is, what is making a difference in the countries where we operate. So as I mentioned, we are the largest producer in Côte d'Ivoire and Burkina Faso. We are, if we take a country like Burkina Faso, we are the largest private employer. And therefore, we have a very strong deliberate policy of hiring local content and upskilling them, which I'll talk about in the next slide. But Côte d'Ivoire, Burkina Faso, and Mali are all also members of EITI. We pay obviously a very strong share of taxes and royalties and are extremely transparent, whether in our annual sustainability report or also into ESTMA. We generated about $627 million of economic value back in 2019. Endeavour Mining is also a member of the World Gold Council, and we've been adopting their ESG framework, the Responsible Gold Mining Principles. We've linked both short and long-term executive compensation to clear ESG deliverables, so that all the management is really focused on getting on board our key ESG targets. I would say that close to 70% of our procurement budget is spent in country. And has been supporting more than 1,000 different local businesses. 77% of our electricity is from the grid and mainly from renewable energy sources, given the high density of hydro power, in particular in Côte d'Ivoire, and 22% reduction in our GHG emission intensity in 2019. Obviously, we've been focusing a lot on strong safety record, which we are pretty proud of. One of the key policy that we've been focusing on at Endeavour is also focused on growing local talent. If you see in particular, and this was pre the semaphore closing, 3 out of our 4 operations are led by a West African GM. Obviously, overall, our workforce is 95% with nationals, and we are growing in terms of head of departments to be more and more from West Africa. So we're pretty proud on this policy of growing our local talent and making sure that progressively we are able to identify and grow local talents within West Africa. Moving now to quickly to a presentation of who we are after this introduction on the West Africa and why West Africa. So in terms of profile, as you can see, we have a key shareholder, La Mancha, which I used to be the CEO when we started La Mancha back in 2012. And then La Mancha took 30% of Endeavour Mining in 2015, and in 2016, I became the CEO of Endeavour with a clear view to turn around the company. As part of the semaphore transaction, La Mancha is now down to 24% of the combined group. In terms of our objective, we do focus ourselves on creating a premier diversified West African gold producer. Target is to reach above 1 million ounce, but below 850 all-in sustaining cost, with progressively getting to above 10 years visibility in terms of life of mines, but also key criteria, which is targeting 20% return on capital, which means having a strong capital allocation discipline. In terms of delivering those objectives, we've been focusing ourselves on 4 strategic pillars: operational excellence, project development, unlocking exploration value, and also portfolio and balance sheet management. So what's been important in our journey to reaching those targets is our first strategic plan from 2016 to 2019, which has been, when you look at our profile back in 2015, has been short mine life, lower production, higher all-in sustaining cost. And in order to do that, as we were not gifted with, I would say, the right portfolio of assets at the beginning, we've been investing close to $1 billion over the last 4 years. We've built our key mines, and in particular, we've been building our two flagship mines, Houndé and Ity, which has allowed us, by divesting also non-core asset, to change completely the profile and the portfolio of Endeavour. Which is now reaching in 2020 with the completion, in particular, of the SEMAFO acquisition to above 1 million ounces of annual production, plus 10 years reserves, and below 900 all-in sustaining cost. Now you can see here the production profile going forward with this profile in 19, 20, 21, 22 above 1 million ounces. I'll jump quickly to the next one. As I mentioned, as part of this SEMAFO transaction, we're becoming one of the top 15 gold producer with objective to continue to grow. In terms of all-in sustaining cost, we position ourselves on the bottom third quartile of the industry, and we do believe that we have potential to continue to improve our all-in sustaining cost over the next few years, given the quality of the assets that we have in the portfolio. In terms of operational excellence, I would simply mention that we tend to have a very hands-on management model with all the team being based out of London, and a big part of the operations team based out of Abidjan, and this allows us, being highly focused geographically, to have access from Abidjan to all our mine sites in less than between 1 to 2 hours, which is obviously extremely useful in terms of getting to any of the sites and being able to access them very easily. In terms of safety has been our key priority, and if you look at our safety records over the last 3 years, we've been progressively improving this overall LTI, lost time injury, and we believe that 2020 should be in line, despite a more difficult first quarter, that 2020 will be in line with 2019. In terms of projects, as you know, Endeavour has been building a lot of mines using its own construction team, and I think we've set a strong construction track record, in particular with the two last construction we've made, Houndé and in Burkina Faso and Ity. What has been exceptional is all those projects came in on time and on budget, and if we compare, obviously, budget cost for those projects and also timing compared to, I would say, more mature countries like North America or Australia, the average path for building those mines have been between 14 to 16 months, which is extremely faster than what you see today in North America and Australia. Project pipeline. What is important also is to ensure that we can progressively keep alive a pipeline of projects. So we have in particular some near-term projects that we are preparing for the future, with Kalana in particular in Mali, and Fetekro, which has been a discovery from 2 years ago that we're seeing growing fast. So what's very important for us is in terms of capital allocation, we've decided to focus 20 and 21 strictly on maximizing cash flow generation, which means that in parallel during those 2 years we'll be preparing some new projects and progressing Kalana and Fetekro in particular to DFS level by the end of 21. But we want, before 22, launch construction of a new project in order to maximize our cash flow generation in 20 and 21. So as I mentioned, what's been interesting is when you look at key projects which are coming progressively into our pipeline, in particular Kalana and Fetekro. Interestingly, Kalana is about 2.3 million ounces of MNI at 2.7 grams per ton, and if we look at Fetekro, about 1.2 million ounces at 2.5 grams per ton, and growing fast. We're expecting by end of July to publish some updated resources on Fetekro, and I wouldn't be surprised if we get to above 2 million ounces, which in less than 2.5 years after the discovery of this target has been extremely promising for the future. Exploration is one of our key pillars for development in the future. As everyone knows, real value creation in mining goes through the drill bit, and we're very happy with the consolidation that we've made through the acquisition of SEMAFO. On the left side of this graph, you see that this allows us to consolidate in particular what we call the Houndé Belt, which is a world-class mining district, and by securing Mana and also the Bantou project from SEMAFO, which is south of Houndé, we do see much more potential coming in the future from this belt. And obviously on the other side, you've got the ET belt that we've been consolidating progressively over the last 6 to 7 years, in particular with close to 100-kilometer long strike all along ET, and 20 kilometers large. So this ET belt is absolutely amazing, as you saw in the multiple discoveries that we've been doing over the last 5 years. So being able to grow the company, focusing and having those two belts into our portfolio, one, the Houndé Belt in Burkina Faso, the other one, the ET Belt in Côte d'Ivoire, give us some strong foothold for further discoveries in the future in two different countries in West Africa. So unlocking exploration value, we do believe that we have an amazing exploration portfolio, which is why, when people are asking me whether I'm targeting M&A for exploration in the future, the answer is no, because it's very complicated for us to find attractive exploration targets outside our own portfolio. If we look at, in particular, back in November 2016, we did came up with a pretty ambitious exploration strategy, where we said that we would be investing over the next 5 years between $40 to $50 million in exploration. But more importantly, because a lot of companies are announcing an exploration program and spending dollars on exploration, more importantly, we set back in 2016 that we would find between 10 to 15 million ounces of indicated resources over this 5-year program. So not only we've set, what we will be spending in exploration, but we set also what we are expecting to discover out of those dollars spent in exploration. And what has been interesting is when we look in particular at where we are today, after 2.5 years, 3 years on this program, on this journey, we've already found 6.3 million ounces. So we are about 2/3 of our objective after 3 years, and there is a lot to come in terms of discoveries in 20 and 21. So we are confident that we will reach this minimum 10 million ounces of indicated resources discovered through this program, which has been a very successful exploration program so far. Two examples in showing what we've been doing in terms of exploration is life of mine extensions. So if you look at the ET life of mine plan, you can see that our objective is to turn ET into a 250,000 ounce produce asset for 10 years minimum. And this is basically, if you look at the gray area on this slide, this is the gap in terms of ounces required to reach this 250,000 ounces for 10 years, and which is currently being filled up with the Le Plaque discovery that we've made. You probably saw that a week ago we announced an increase in the Le Plaque resources. So we will be publishing in the next few weeks an updated life of mine plan for ET, demonstrating that this asset is now with 250,000 ounces for the next 10 years. Same with Houndé, which has been on the same trend thanks to, in particular, all the carry pump and carry area. So you see again on this slide in white the initial life of mine plan, and in gray what was required in order to get to 250,000 ounces for the next 10 years. And very pleased with all the success that we've been having at Carry Pump, Carry West, and Carry Center, where we found, in fact, above 1 million ounces on Carry Pump, and intend to add another 1 to 1.5 million ounces on the rest of the Carry area, making this Carry area a highly prolific area in terms of discoveries, and making sure through this that again Houndé is becoming a 250,000 ounce asset for the next 10 years. And obviously having visibility over 10 years, for each of those two flagships is critical for the future. Some of you know pretty well now this. This is probably my favorite graph, where we simply present what we are targeting in terms of strategy. Bottom axis is mine life in years, and the right axis is all-in sustaining cost. And basically the strategy is very simple, making sure that all our assets are going progressively into the bottom right square, which I call the magic square, which is above 10 years mine life and below 850 all-in sustaining cost. So you can see that Houndé and ET that we've built over the last 3 years are into this square. And if you look at the arrows, it's basically what we are expecting in terms of discovery through our exploration strategy to increase mine life. And we also, through this exploration strategy, intend to have better ounces that will drive down the all-in sustaining cost from those different assets. The white circle are basically mines that we've been divesting over the last 4 years. So active portfolio management. So we've been selling Yuga, Nzema, Tabakoto, and moving the ET heap leach operations into ET CIL, which has been built and commissioned back in 2019. So being active on our portfolio has been always a key strategy for us, making sure that we don't keep assets which are not generating the right level of returns for the company and for our shareholders. No string attached, no emotions to those assets. If they're not delivering the value that we're expecting for our group or for our shareholders, we simply believe then that others are probably better owners of those assets. Now moving to the balance sheet, just wanted to highlight on this one the fact that we have, after the end of the ET CIL construction, we've seen this critical inflection point in terms of cash flow. And you see that since Q3 we've been generating, Q3 last year we've been generating close to $200 million of net cash, which is a clear inflection point. We are now accelerating and generating strong net cash flow. In terms of portfolio, also what is very important and critical for us is we want to maintain cash flow profile with a very strong balance sheet. So you see that we have about $550 million of liquidity. And also when you look at our free cash flow, we are expecting our free cash flow to be in double digits, which is obviously extremely attractive. If we look back at our Q1 2020 annualized, we are close to 16% free cash flow yield. Again, in terms of key metrics that we've been focusing and that I was announcing at the beginning, targeting 20% return on capital employed. If you look at Semafo in 2019, they had a 13% return on capital employed. And for Endeavour, 10% last year. But obviously, which is interesting is now that we are moving out of our investment phase and harvesting cash flow from our newly built mines, Houndé and Ity. If you look at the H2 2019 annualized, we were at 14%. And therefore, we are expecting the return on capital employed for the group to continue to grow over the next months and years. In terms of pro forma following the acquisition of Semafo, if we look in particular at Q1 20, what is interesting is to see that in Q1 we've been generating as a pro forma group close to $187 million of cash flow, which means that on an annualized basis we would be around $750 million of operating cash flow for the group. 0.5 times net debt to EBITDA for the combined group, which means that at current gold price environment, we're expecting to be close to zero by year end, meaning fully deleveraged, which will be about 12 to 18 months ahead of our schedule for Endeavour on a standalone basis. So this is why this acquisition has been, pretty attractive for us. Last but not least, in terms of investment, proposition, we do believe that Endeavour is basically providing immediate cash flow, strong cash flow, with, I was mentioning 16% free cash flow yield on Q1. We're also offering near-term growth with our projects in the pipeline, in particular the upcoming Kalana and Fetekro beyond 2022. And also we're offering very long-term upside thanks to the quality of our exploration portfolio and also what we've demonstrated over the last few years in terms of exploration discoveries. So this is, in short, I would say, a quick introduction to Endeavour Mining. Thank you very much for your attention.
Hi, Sebastien. Thank you very much for that. I noted the smile on your face when you said this is a quick introduction to Endeavour. We've gone over our time, but I think in the interests of some of the questions coming through, it's worth asking them. So we're just going to keep going if you don't mind. And one of the questions was, and I know that you did mention in your presentation that you did not intend to pursue exploration M&A, but I think this is broader based. It's how does the industry landscape look in terms of mergers and acquisitions, and is there anything out there that still interests you?
Thanks, Ian. Well, I think that in terms of consolidation of the industry, one of the big supporter, and I'm trying to be more and more vocal, like a few other CEOs in this industry, on the fact that gold space needs to consolidate. I think that we are a small industry, and if we want to be relevant, in particular for generalist investors, we need to consolidate this industry. There's been too many small companies, too many G&As, too many board fees, too many of those, which makes this industry sometimes less attractive than others industries. And I think it's time for some of us to take a lead on this, to make sure that we remain relevant for generalist funds. So I wouldn't be surprised. I mean, if we continue to see further consolidation in this sector. For this, I mean, we need to fight entrenchment. There's been a lot of management and board members that have been entrenched in this industry, and I think that investors, in particular large investors, large institutions, needs to play a role on this subject in order to help the consolidation of the industry. In terms of exploration, I would say that we haven't seen in the area where we've been focusing, we haven't seen, I would say, very attractive emerging exploration targets. And this is why we've been focusing so much on our own exploration pipeline, investing between $40 to $50 million in exploration. And I must say, with pretty good results so far, thanks to the quality of the team that we have, but more importantly, the quality of the exploration ground that we've been accumulating over the last 5 years.
Very good, very good. And this is a question, several of these questions have come up already, Sebastien, so it's not to do specifically with you, but how do you respond to the market's concerns around security in Burkina Faso, given recent events there?
Sure. Well, I think that first of all, this West Africa is a region where we've been operating for close to 15 years, and a big part of the team at Endeavour has been working with me for the last 10 to 15 years. So those are regions where we are familiar. We are familiar with the risk. I would say that from that perspective, you need to have very strong processes. You need to have also a strong security team, and you need to have the strong relationship also with the government and the communities where you operate. Ultimately, I would say that the only area that has been under scrutiny from a security standpoint is really the north part of Burkina and a bit of the east part of Burkina. But there has been some significant changes happening over the last few months. I think everyone needs to understand that you face in Burkina Faso with a president which has decided to fight and basically fight against all those terrorist group or so-called terrorist group. A lot of them are not only terrorists, but they are so-called terrorists, but in fact they are trafficking bands. And I think we need to to support this type of government. And I think that the different meetings that I've been holding over the last few weeks, including 3 weeks ago with the president of Burkina Faso, was really going into the right direction. The French also, with the Barkhane force, have been increasing their resources there. And there's been some major progress in setting French troops in the north part of Burkina in order to protect that country. So I think it's clearly something that it is at our forefront in terms of strategy and making sure that we do have the right safety for our assets and our people. But at the same time, I would say that risk comes with a lot of rewards. And if you look, I was mentioning in my presentation, building mines in West Africa has been much easier, cheaper, and quicker than in any other part of the world. And I think the results that we've achieved with, in particular, Houndé and Ity, demonstrates that. And same thing on the exploration side. So it's possible to be I think successful and operate in this region.
Great. And let's just squeeze in one last one. SEMAFO was known for a strict policy of not hedging the gold price. By contrast, Endeavour has regularly used hedging in the past. What will the policy of the combined business be going forward?
Sure. Well, the way I'm looking at hedging policies is I'm not a financial investor. I'm an industrial guy who likes to protect its investment when we are in investment phase. So we don't do hedging for the sake of doing hedging. We do hedging when we believe that we need to protect our cash flow because we are in a particular phase. So each time we've put a hedge in place, it was during the construction phase of both Houndé and Ity. And we did it last year for the first 12 months of our deleveraging phase. So the hedging that we had in place was ended, in fact, at the end of June, so a few weeks ago. So we are now completely unhedged, and there is no reason for us, to have any hedging policy in place going forward. We believe now that we have the right portfolio of assets with all-in sustaining costs, which are pretty low, whatever the gold price will do in the coming years. And therefore, there is no hedging policy in mind. This would probably come back, in case we had a weak balance sheet, which is obviously not the case. And if we were doing a big construction phase, which is not the case again in the short term, as 20 and 21 will be solely focused on maximizing cash flow generation, fully deleveraging the balance sheet by year end, and thereafter in 21 piling up cash for the future.
Great. Thanks, Sebastien. And thinking of your comments you made earlier in the Q&A about consolidation, clearly you'll know Mark Bristow was banged that table for a very long time, and look where he is now. So hopefully you follow a similar sort of trajectory. Good luck with that.
Thank you, Jan. I would just say on the case of Mark that he has left now West Africa, which has been his full success. And this is why we're focusing so much on West Africa, because we believe that there is a space that has been left, and there is the ability to build up a new strong West African gold player.
Great. Thank you, Sebastien.
Thank you very much, Ian.